The 2026 OBBBA legislation introduced a provision that allows you to shield up to $12,500 of your overtime pay entirely from federal income taxes. Despite this shift in the tax code, roughly 40% of legacy payroll platforms have failed to update their internal coding to accommodate the law. Because of a simple checkbox oversight in your employer's payroll software, what could be throwing thousands of dollars directly back to the IRS? We are going to run a quick 3-step payroll audit to check your system's coding, secure your W-2 reporting, and protect your money. Locking in this specific tax shield provides the exact mathematical equivalent of a 4% raise without ever having to negotiate with your boss. Before we begin, we need to check your eligibility. This exemption strictly applies to W-2 employees who are legally eligible for overtime. If you are a 1099 independent contractor, you are excluded from this provision. The government also built in income phase-outs. The shield begins to taper off if your base salary reaches $95,000 as a single filer, zeroing out near $130,000. For married couples filing jointly, the phase-out typically starts around $165,000. Step 1. Pull up your most recent physical or digital pay stub immediately. Take a look at this earnings statement mock-up. Notice how the regular hours and overtime are merged into a single gross pay line item. This is the failure state to avoid. Compare that error to this side-by-side breakdown. To comply with the new law, your pay stub must show a clear, explicit separation between your base rate and your bonus effort. If the IRS computer processes an aggregated gross number next April, it will automatically assume the entire amount is base salary, and your tax shield vanishes. Step 2. If your pay stub lines are blurred, you need to email your HR department or payroll administrator today. This is a standard W-2 form, and your focus needs to be on box 14. Your goal is to force your employer to ensure your overtime is separated into this exact box using the correct 2026 IRS subcode. You can copy the exact phrasing shown here to guarantee compliance. Ask them, "Can you confirm that our payroll processor is specifically coding OT to comply with the 2026 OBBBA W-2 Box 14 reporting requirements?" Do not wait until next tax season to discover your software is misreporting your income. Forcing HR to issue a corrected W-2 during the peak March filing rush is a highly stressful bureaucratic process. Securing written confirmation from HR right now shifts the liability away from you and legally locks in your protected income well before the deadline. Step 3. We shift from playing defense on your tax return to actively generating monthly cash flow. By legally adjusting your W-4 withholdings, you reduce the amount of tax extracted from your paycheck right now, instead of waiting a full year for a spring refund. This chart shows how your standard take-home pay grows if you consistently max out the $12,500 shield. This adjustment injects an extra $150 to $250 of predictable capital directly into your family's monthly budget. Making real-time adjustments transforms a passive government refund into active working capital that you can deploy immediately to offset inflation. Now we have to execute an advanced tactical move regarding exactly where you deposit this newly freed cash. If you route this legally 0% taxed overtime directly into a traditional account, you are making a massive tactical error. Traditional accounts are designed to give you a tax deduction today in exchange for deferring those taxes until retirement. But since the new law already made those specific dollars tax-free today, depositing them here completely wastes the deduction. Instead of the traditional bucket, route these extra dollars directly into a Roth IRA. This is the double dip. Pay zero tax today, let it grow tax-free for 30 years, and withdraw tax-free at retirement. Pairing the OBBBA loophole with a Roth account structure represents the ultimate mathematical leverage for retaining middle-class wealth. You have audited your earnings statement, forced Box 14 compliance from your employer, and strategically redirected your extra cash flow. You successfully protected your hardest-earned money from being swallowed by institutional software laziness. Your time is your most finite asset. If you are sacrificing weekends to build a fortress for your family, ensure the math respects your sacrifice. Stop giving the government a 0% loan. Click the link below to run the Tax Regime Optimizer and recalculate your Roth allocations today.